Hello everyone, welcome to Synthesis IAS Academy, a place where blend of ideas do take place. About me, I am Sandeep Bhushan and my credentials are I have 10 years of teaching experience for civil services and I teach the subjects that is international relations, internal security. I also go ahead with taking up the daily news analysis of the Hindu newspaper along with the in-depth analysis of the editorials and articles. And this session will certainly guide you throughout your preliminary examination as well as mains examinations, because I would be emphasizing on the keywords and the key phrases, and these keywords and the key phrases which I would be emphasizing throughout my lecture will certainly help you to clear prelims and mains examinations, because you can identify the factual, analytical and conceptual questions which will be useful for preliminary examination, and in regards to the mains examinations you would be certainly be benefited in regards to the answer writing. So answer writing is the key for your mains examinations, and when you imbibe the keywords and the key phrases in your answer writing, so that your answers should be precise and concise, and once your answers while you are writing it in the mains are precise and concise, certainly you will score higher marks in the mains examination. So therefore my session will guide you to crack prelims and mains both for 2020 as well as 2021 also. And today's topic is Banking Regulation Act 1949. So we know that the Lok Sabha has given the nod, or it has been passed even in the Lok Sabha, that is in regards to the Banking Regulation Act 1949. So the topic will be the Banking Regulation Act 1949. And when we focus in regards to the Banking Regulation Act 1949, I would also get into the subtopics of it, which will be very useful for you as a civil servant aspirants for UPSC perspective point of view. So I will be focusing on the banking system of India and the introduction of the Banking Regulation Act 1949. So I would be looking at or focusing on the introduction also, and also the objective of the Banking Regulation Act 1949. And before that is today's news, which talks about the Lok Sabha nod to amend the Banking Regulation Act 1949. So we had in the month of June an ordinance which was being passed, an ordinance. So we will also focus that ordinance, that is the Banking Regulation Amendment Ordinance 2020. So do watch or do follow the video completely so that it will be useful for you for the prelims as well as mains examinations. And this is in regards to the banking system of India. Now we'll get into the banking system of India. So definitely it consists of the banking system in India consists of central bank, commercial bank, cooperative banks and developmental banks. And these institutions, or else the three, the central bank, commercial banks, cooperative bank and development banks, these institutions do provide a ground for both of them, who for the savers and the investors. For it will create a meeting ground for the savers and the investors, and they form the core Indian financial sector. So the India's financial sectors are the savers and the investors, and that is being by the central bank, commercial banks, cooperative banks and development banks. So this is the core of the banking system, and how the India's financial sector has been gradually growing since the 1949 Regulation Act. And the banking system of India, it goes ahead with mobilizing of the resources. Why does it mobilize its resources? For the better allocation, and also the banks will play an important role. Definitely the banks have an important role to play in the development process of the underdeveloped country such as India. So when we are talking about the banking system or the apex bank, that is RBI and its various, that is central bank, commercial banks, cooperative banks and the development banks, definitely they have the important role in the development of process for the underdeveloped countries and even for India. So that is why the banking system should be very strong, and also in India the banking system is very strong. And the banking development in India, definitely it is a state induced activity. So do focus on the keywords. So the banking development in India is a state induced activity. And now if we focus on the Reserve Bank of India, so definitely when we are talking of the Reserve banking system of India, we need to know the India's financial sector, that is the core of the Indian financial sector, and the different banks. We have spoken about the four banks, and the savers are important, the investors are important, and the development process, definitely the banking system is very, very important for the underdeveloped countries, and the banking development in India is a state induced activity. Comment. So there could be a question in the main saying that the banking development in India has been by and large a state induced activity. Comment. This could be a question in the mains also. So it is very important how you focus. How you focus for prelims point of view and mains point of view is very important. And throughout my lecture, I would be emphasizing on the keyword which will be certainly useful for you all. So here if you look at the Reserve Bank of India was nationalized in the year 1949, and then followed by the Imperial Bank of India was nationalized later on. That is now what we call the State Bank of India, and then the Imperial Bank of India was nationalized in the year 1955. And then later on in the year 1969, 14 major commercial banks were nationalized, and then again in the year 1980 added to 14, it was another six commercial banks were nationalized. So we have focused at the nationalizing of the bank, that is RBI in the year 1949, and then 1955 Imperial Bank of India was nationalized, and in 1969 totally 14 commercial banks were nationalized, and in 1980 another added to the 14, that is 20, the number has been increased to. And if you look at the economic reforms which have been taken up in India, or prior to the economic reforms, that is before 1990, the banking business in India was near monopoly of the government of India. So post 1990s, that is post economic reforms, we cannot really have a sense of monopoly of the banking by the government of India, because we have opened up the foreign investors even in the banking sector, and then we could see many foreign banks or the private banks which have entered, and then that is the reason that economic reforms has initiated the banking business in India, which was near monopoly of the government of India, has completely changed the scenario in regards to the banking system of India. That is why I have focused on the banking system of India. And now we will look at the introduction of the Banking Regulation Act 1949. No doubt that is yesterday, September 16th, 2020, we have seen the Lok Sabha has passed the Banking Regulation Act 1949. So before knowing the last Lok Sabha which has been passed, the Banking Regulation Act 1949, we need to get into the mode of understanding the introduction or the basic understanding of the Banking Regulation Act 1949. So we will look at that now. So this Banking Regulation Act 1949, earlier when it has started, it contains various provisions like which were governing the commercial banks of India. For example, Negotiable Instrument Act and the Companies Act 1956. So the initial Banking Regulation Act 1949 does have, or it did have, the provisions which were governing the various commercial banks. And the initially the Banking Regulation Act was known as Banking Companies Act 1949. So this is a keyword again which do focus for prelims point of view. Prior to the Banking Regulation Act 1949, it was called as Banking Companies Act 1949, and it was passed in 49 to consolidate and amend the laws which were relating to the banking companies which were existing prior to 1949. And the name, that is the Banking Companies Act 1949, was changed to the Banking Regulation Act 1949 on 1st March of 1966. On 1966. So this is again useful information for the preliminary examination. And the Banking Regulation Act 1949, definitely it aims at the development of sound and balanced growth of the banking business. So definitely what is important for an underdeveloped country like India, sound and balanced growth of the banking system in India is very necessary, and it is the need of the hour. And this act creates a comprehensive piece of legislation for the development of sound and balanced growth of the banking system in India. And the Banking Regulation Act 1949, it does not apply. It does not apply to agricultural credit societies, and it also does not apply to cooperative land mortgage banks and other cooperative societies. It is only in regards to the banking initially when it started. And the act was applicable to commercial banks only, as we discussed, and later on it was amended. Please do understand, initially it was not. It was from 1949 till 1966, it was only particularly applicable to commercial banks only. But only in the year 1966 there were amendment made to the Banking Regulation Act. That is why we have seen the Banking Companies Act 1949, the name changed to the Banking Regulation Act 1949 in the year 1966. Thereby later on it was not just applicable earlier, which was applicable to only commercial banks. Now it has included cooperative banks. So the question here for the preliminary examination and a better conceptual understanding is, when did the cooperative banks been included in the Banking Regulation Act 1949? Which among the following years? If it is 1949, 1954 or 1964 and 1966, the answer is 1966. So then in the year 1966 it has included the cooperative banks in the ambit of section 56 of the Banking Regulation Act 1949, and the act extended to whole of India except Jammu and Kashmir. So definitely the introduction of Banking Regulation Act 1949 would be a probable from the UPSC perspective that he might pose a question. So that is why I have taken this, and it would be a very important information for you all. And now we will focus on the objectives of the Banking Regulations Act 1949. So what is the main objective? It is to provide a legislation. It is to provide a specific legislation so that it is having a comprehensive provisions which are particular to the business of banking in India. So it is only specific to the business of banking in India. And the next one is to prevent any kind of bank failures, wherein by prescribing minimum capital requirement. So if there is any prescribe of any minimum capital requirement for the in regards to the banking regulations in the banking system in India, so there it will prevent such failures which might gradually pop up. And the third one is to ensure a balanced development of banking companies. So it is a balance. The keyword is the balanced development of banking companies. And the fourth one is to empower RBI. Why? So that the RBI can appoint, reappoint and remove the chairman, directors and officers. So this is the one of the major objective of the Banking Regulation Act 1949. And the fifth one is to safeguard the interest of the depositors, and that is the basic of the Banking Regulation Act 1949 objectives. And the sixth one is to facilitate strengthening of the banking system in India, because if the banking system is strengthened and if it is very strong in India, definitely any kind of shock which has been created or which would be across the world, we would not be majorly impacted by that economic shocks if our banking system is strong. That is why one of the objective is to strengthen the banking system in India. So we have focused the objectives also. And now we will look at the Banking Regulation Ordinance 2020. This is what I was talking about, because on June 26, 2020, during the national lockdown or during the COVID-19 pandemic situation, the government has come up with an ordinance. The government has come up with an ordinance, and that is through a presidential decree. We know it. So it has amended. So the ordinance has amended a 7 decade, that is 1949 Banking Regulation Act has been amended. And it has brought what? Cooperative banks under the regulatory framework of RBI. Now, which is very, very important. So if you look at the other side of it, here I will say, see, the cooperative banks were included in the year 1966, fine, by adding section 56 to the Banking Regulation Act 1949. Now the point what I am talking about, the ordinance or the Banking Regulation Amendment Ordinance 2020 is, it is not just included, it is now brought. Which is brought? The cooperative banks are brought under the regulatory framework of the RBI. Earlier it was part of the Banking Regulation Act of 1949. It was included, but now it is under the regulatory framework of RBI. This is very, very crucial information which you need to focus for preliminary examination, because now the ordinance, that is June 26, 2020 ordinance, has brought the cooperative banks under the regulatory framework which is of the RBI. Besides that, the ordinance also has put forth the cooperative banks will now be allowed to raise money. So now the cooperative banks can be allowed, and it is allowed to raise money through public issues or any kind of private placement by equities and shares, as well as in regards to the debentures. So now the cooperative banks can raise money through the public issue or private placements by equities, by shares, and by debentures. So these are very, very crucial information, because this could be very important for you all in regards to the mains while you are writing an answer or preparing a short notes. And the ordinance has definitely is seeking to protect the interest of the depositors. It is not just protecting, it is seeking to protect the interest of the depositors, but it wants to strengthen the cooperative banks. So it is worried about the depositors, it is also worried about the cooperative banks. Who? The ordinance, Banking Regulation Amendment Ordinance 2020, and it wants to improve. And how this protection and strengthening of the depositors and the cooperative banks will come into existence? It can by improving governance and oversight of extending powers already available with the RBI. So the governance has to be run properly, and the powers which have been given to RBI should be taken up, so that there would be a sound banking regulations, and that can happen through a sound banking regulations. So protecting the interest of the depositors and to strengthen the cooperative banks is the core of the ordinance. And sound regulations, when we are talking of the sound banking regulations, how does it can happen? And that can happen only through a proper governance and extending powers or empowering RBI. And then once the sound banking regulation or sound banking system comes into existence, it will enhance the professionalism and the access to capital, so that the banks will be more of capital, or the capital fund, the credit flow will be very high into the bankings. And these changes which have been brought to the banking law through the ordinance do not affect, this is again very important keyword for the conceptual understanding, it do not affect the existing powers of the state registers of cooperative societies. So this does not, the changes brought in, it does not affect whom? The state registrars of cooperative societies under state laws. Please do consider this point, it is very, very useful information. The changes brought in by the banking law do not affect the existing powers of the state registrars. So the state registrars who are part or who are in the cooperative societies under the state laws will not be affected by the new banking law. And now we will also focus on the changes do not apply. Already, as we spoken about the registrars, state registrars to the cooperative societies under the state laws, which will not be applicable, and now the changes do not apply even for the primary farm credit societies to the cooperative societies, and also the main business which are in the long term finance for agricultural development. So it does not impact or does not affect the state registers in the cooperative societies and to the farm credit societies and also to cooperative societies and to the long term finance for agriculture development. So this, the new banking law do not affect these four sectors. And now we will look at why the cooperative banks were brought under the regulatory framework of RBI or regulatory body of RBI, because we have seen the PMC bank fraud. What is PMC bank fraud? That is Punjab and Maharashtra cooperative bank fraud we have seen, and wherein they have actually made sure that there were various fictitious bank accounts which were created and there was a big fraud. That is why now the cooperative or the state cooperative banks through the ordinance by the Union Cabinet have brought in 1482 urban and 58 multi-state cooperative banks under the supervision of RBI, so that there will not be any future bank frauds which would be taken up in the cooperative banks. Why? Because the main intention, the aim of this ordinance was to strengthen the lenders' oversight and to boost the depositors' confidence and to prevent any kind of cooperative bank frauds. So this, please to focus. And the cooperative banks are currently now under the dual control of the cooperative societies as well as RBI. So now the cooperative banks are under the dual control of cooperative societies. So they are under the societies because the state registrars of the cooperative societies do not fall under the new banking law. I did make it very clear. So this statement could be asked in the mains. The cooperative banks are currently when we're talking about in regards to the Banking Regulation Act 2020, if you are talking about cooperative banks under Banking Regulation Act 2020 are under the dual control of cooperative societies as well as RBI. Explain in the mains examination in GS paper 3. Cooperative banks are currently under Banking Regulation Act 2020 under dual control of cooperative societies and as well as RBI. So please do focus this. I have given a better explanation how it can be asked in the mains examination. And now the role of the cooperative society, because we are talking about they are under the control of cooperative societies as well as RBI. Who? The cooperative banks, as per the new act or the bill. We can take it as a bill 2020, not act, because it is still not been had the assent of the president. So it is a bill. So these cooperative societies now they include incorporations, registrations, management, audit and supersession of the board of directors and also all the liquidation. So definitely even the cooperative societies do have the role in trying to contain as a regulatory body in regards to the directors and the liquidation of the cooperative banks. And the government's move to follow the collapse of the PMC bank, as we said, as it has gone ahead with creating fictitious accounts and it has hided 4,355 crores of loans which were extended and they were now bankrupt. And one which is bankrupt is again this is useful information for preliminary examination. Housing Development and Infrastructure Limited, HDIL, is now totally bankrupt. Housing Development and Infrastructure Limited. And now we will focus at what is actually happened on September 16, 2020. So the Lok Sabha has given a nod to amend the Banking Regulation Act 1949. So this is the news. This is the news which is actually the newspapers have focused, but have given the background information for you all so that you will have a solid base, solid information analysis for both prelims and mains examinations. We have spoken of the banking system, and then in regards to the introduction of the Banking Regulation Act 1947, and then the main regulations, or else in regards to the main intention of the Banking Regulation Act, and then we are focused on the Ordinance also 2020, and now this has been passed, that is Banking Regulation Act 1949 has been passed as an amendment to the Banking Regulation Act 1949, which we discussed that it will bring the cooperative banks under direct supervision of RBI, and brings them under some of the governance norms, regulations, as well as commercial banks. So the cooperative banks are totally put under check, and they would be vigilant by the RBI, by the governance norms, and by the commercial banks also. And now by this amendment, it will give RBI to amalgamate, that is to make sure that it is part of it, or reconstruct a stressed cooperative banks. That is, in the future any cooperative banks which are stressed, it could be various reasons, it could be a fraud, or because it could be the defaulters have been increased, or the non-performing asset of the bank has been taken up. So in that case, the RBI can amalgamate, that is it can merge and reconstruct any stressed cooperative banks without first imposing a moratorium. So there is no moratorium, that means there is no suspension, temporary suspension. You do not have any kind of temporary suspension if any cooperative bank is under stress, but directly RBI can amalgamate or reconstruct, keeping in view the interest of the depositors. And the bill replaces the ordinance to the same effect which was promulgated on June 26. So this also I have discussed. So we have discussed the entire June 26th Banking Regulation Amendment Ordinance 2020, and this bill now replaces the ordinance, and the bill seeks to strengthen the cooperative banks as to prevent a crisis which has been experienced by the banking system in India because of the PMC Bank, due to financial irregularity and the distress among the depositors. And the bill will strengthen the cooperative banks, and it will also increase the professionalism in the cooperative banks, and it will enable the access to capital. That means many of the depositors now will feel the confidence and then come back and then invest or deposit their money in the banks, and it will also improve the governance and ensure sound banking system in India, and that all through the regulatory body, that is Reserve Bank of India. So I hope the entire session was very informative, knowledgeable one, so that it can be very, very important for prelims as well as mains examinations. So a very big thank you to all, and a good luck to you all. And then do like the video, share the video, and subscribe the video, that is of Synthesis IAS Academy YouTube channel, wherein you will have the blend of ideas taking up. And then I will come up with the new topic once again. So see you later on. Thank you very much.